Good morning, viewers. It's Friday morning, April 4th, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Highest US tariffs in over 100 years slammed markets. US stocks cratered on Thursday in the worst one-day sell-off since 2020, with the Dow tumbling almost 1,700 points as President Trump's surprisingly steep Liberation Day tariffs sent shockwaves through markets worldwide. US markets slid on Thursday in the steepest decline since 2020 as investors grapple with the threat that President Trump's new tariff plan will trigger global retaliation and hurt the economy. Stocks lost roughly $3.1 trillion in market value on Thursday, the largest one day decline since March 2020. The Dow Jones Industrial Average dropped 1,679 points, or 4%. The tech heavy NASDAQ, which powered the market higher for years, was down 6%. The S&P 500, which fell 4.8%, and the other benchmarks suffered their sharpest decline since the early days of the COVID-19 pandemic. Small cap stocks were also hit during the session as the Russell 2000 index declined more than 6.4%, close in bear market territory. The two-step approach to tariffs unveiled by Trump on Wednesday imposes a baseline rate of 10% on all US trading partners, but applies extra duties to countries considered bad actors on trade, meaning they face much higher rates. The levies go into effect on April 5 and April 9, respectively. In total, some 185 countries are impacted by the tariffs, and the new duties set the effective US tariff rate at its highest level in over 100 years. Some of America's allies came out swinging after the details of the US president's tariff plans were disclosed late Wednesday. French President Emmanuel Macron said Europe is weighing retaliation against US tech firms, while Canadian Prime Minister Mark Carney said his country will match President Trump's auto tariffs with 25% tariffs of its own. For his part, Trump downplayed the market reaction. In response to a question about the market sell off, Trump claimed that the markets will eventually boom. The damage was heaviest in companies whose supply chains are most dependent on overseas manufacturing. Megacap tech stocks were clobbered. Apple shares fell over 9% amid concerns about disruption to its supply chain. China, the source of key iPhone components, was hit with additional US tariffs that raised its overall rate to 54%. Nvidia and other chip stocks also tumbled, thanks to similar concerns with the AI chip leaders sliding over 7%. Apple led declines among the Magnificent Seven stocks with roughly $300 billion in market value wiped out. The group, which also includes Tesla, Microsoft, Nvidia, Alphabet, Amazon.com, and Meta Platforms, has been responsible for much of US stock market gains over the past 2 years. Lululemon Athletica Incorporated and Nike Incorporated, among companies with manufacturing ties to Vietnam, were also down more than 9%. Target Corporation and Dollar Tree Incorporated, retailers whose stores are filled with products sourced outside of the US, dropped more than 10%. Dozens of household name stocks posted double-digit declines, including HP. Stellantis also fell sharply. The turmoil spread beyond stocks, with oil prices dropping more than 6% and investors selling gold after a sharp run over the past year to fresh records. Oil and gold both fell, and investors dashed for the safety of treasuries, a response to fears that the tariffs will tip the economy towards recession. The 10-year Treasury yield fell about 14 basis points to close at 4.05%, its lowest level since October 2024. The dollar, meanwhile, slipped to its lowest level of the year, a sign of unease over the growth outlook and fears that the flow of international funds into the country will be sharply curtailed. The US dollar tumbled 1.5% to 101.92, also its lowest level since 2024 October. If investors are hoping a sense of calm might descend on markets on Friday, think again. The latest US payrolls will be released at 8:30 a.m. ET, and a few hours later, Fed Chair Jerome Powell delivers a speech on the economic outlook. Stock futures around the world are pointing to heavy losses at the open. My take: I said it yesterday that words from President Trump matters. Trump is on fire and global markets are terrified. One should never read too much into a single day's trading in financial markets, but some days are so dramatic it's difficult not to. Yesterday was one of them. The severity of Trump's tariffs and the trepidation over the damage they will inflict shook investors' confidence after how the market gyrated as much as they did on Thursday. Part of the problem for everyone, investors, households, businesses, and policymakers, is Trump's propensity to change course in the blink of an eye. Some tariffs may be lowered, exempted, or postponed within days should countries come to the negotiating table and strike a deal with the tariff man. Of course, if they are maintained or countries retaliate, the economic and market outlook could darken even more, stoking volatility and uncertainty. Good for the gold, bonds, and short sellers, not so good for stocks, credit, and other risk assets. What next in world trade war? Your guess is as good as mine. Buckle up. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I will see you now on Monday morning. Have a great weekend. In the meantime, happy investing, stay inspired, and remember, it's all about money.